Hello, I'm Hickey from interest.co.nz and welcome to a special housing report brought to you in association with ASB. Of course, we love charts here at interest.co.nz and we've got a cracking one here on the average bank floating mortgage rate. And you can see here that for most of 2007 it was up near that 10% mark, spiked up over 10% in early 2008, and then of course as the Reserve Bank slashed the official cash rate, it dropped sharply too. Then it flattened out for most of 2008, and we all thought it wasn't going to fall any further. But then we saw some significant moves in the last couple of months, in fact the last month in particular, where that rate has fallen sharply, down towards the 5.5% mark. Almost all of the banks, certainly ASB, Westpac, BNZ and Kiwibank, have moved their rates. We've yet to see ANZ National move, although most people expect that they will. This is partly because the banks are looking to gather market share at this short part of the market, and because interest rates for very short term at the wholesale have remained low. And you're beginning to wonder whether a change in the market is happening, where the banks are offering very low floating rates and where fixed term rates, particularly longer term fixed rates, are going to be much higher. Now this is new in New Zealand's recent history. And you can see here from this chart, it takes a bit of explaining, but it helps tells you how the market is changing. This chart works out the difference between the 5-year mortgage rate and the 1-year mortgage rate. People often talk about a yield curve. What they mean is when you have a negative shaping yield curve, that means that interest rates are higher at the short end and lower at the long end. So you see a negative shape in the yield curve. And this chart shows that for most of the last 3 or 4 years, we've seen a negative yield curve. That means interest rates for 5-year mortgages are cheaper than they are for 1-year mortgages. But that has changed in the last year with the official cash rate being cut sharply. And you can see it's really spiked up in the last year or so. So we now have a positive yield curve where interest rates for mortgages at the low end are cheaper than at the very high end. Does this mean that we all move down to the low end? We'll see. But it's a big habit for New Zealanders to break. And the banks and the Reserve Bank are having a good go at breaking it. I'm Hickey. That was a special housing report brought to you in association with ASB.